Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market surged upward last week as investors loved the prospects of lower interest rates. It was a sluggish start Monday as all waited for the central bank announcements. And Tuesday pre-market, Draghi from the ECB said they are ready to stimulate again. And that's, of course, with German rates at some minus 0.3%. It's an amazing world we live in. When that happened, our President Trump hit back and he said, "You're just trying to lower the price of the euro." Of course, that would stimulate their economy. And that's what President Trump is trying to do when he tells our Fed to lower rates. So it's really strange that what's good for our president here is not really good for Draghi there. As I say, we live in a bizarro world, and there's so much more of that we're going to talk about. With the market already moving up on Tuesday, then our President Trump came out and said he was going to be meeting with China Xi at the G20 meeting coming up, and that negotiators would be getting together before that. Well, the stock market already firm exploded to the upside, moving S&Ps up some 40 points. The market absolutely loved that news. Wednesday, a repeat as the market was strong in the morning, and then the FOMC came out and they removed the word patient. So now they're impatient, and that means that investors became impatient also and came in and piled onto stocks. They really poured in as loving the prospect of lower interest rates. Even the fact that a U.S. drone was shot down by Iran could not bring decline in the market. No reaction at all, actually, other than the fact that oil prices surged, and we were looking for them to turn up and get out of some trouble area, and that's exactly what they did. The president ordered that the U.S. hit back, and the planes were in the air to do so, shooting at some military targets. But then he called them back when they were about 10 minutes away from Iran, as the story is told. Maybe somebody talked him into some diplomacy rather than shooting, and the market would not have liked that, but that didn't happen. We'll talk about the stock market on a short-term basis, of course, a little bit later on in the show. All of this talk of central bank ease and the U.S.-Iran conflict really lit a fire under gold, which exploded to the upside. Got as high as 14.15, well into what was our intermediate projection zone for the year. Spectacular move that we saw in there, and oil stocks have absolutely soared to the upside in here. We were very positive there in the gold market. I said oil, didn't I? I meant gold. Gold stocks have absolutely soared, and we were positive in there. Stock market, which had fallen 225 points in 22 days into that May-June period of weakness that we're looking for, exploded back, and in only 13 days made all of that back plus as the S&P moves to an all-time high. The Dow and the NASDAQ slightly behind, not quite getting up there. Dow just barely. And the Russell lagging in there as the small caps are struggling. Our work did suggest that this was the pattern and we would rally into the summer, and here we are, the first day of the summer, and we think this could have a lot more to go. I'm going to share a chart with you that I normally only share with our members in our big picture views and with some of my clients that I talk to who are fund managers. And this is the long-term chart monthly of the S&P 500. And I want to give you an idea of some of the potential upside targets in the market that we're in now. Now, those of you that are bears and skeptics, you know that I have my time of being bearish, and this is my time of being bullish. I am bull-bear agnostic. I just simply look at the charts and the rhythms in the market and then make a decision. Take a look at this chart of the S&P 500, this monthly chart. And what I want to do is explain this to you. This is cycle rhythms in here. And you will see just a remarkable rhythm that you can see that this was the 2002 peak. And these are the minor and dominant cycles right in here. And then it fell right down to this nested area, and you get into a rally period. You make your 2007 peak, and it falls to this nested area. So this was your 2009 low, 2002 low, 2009 low, 2015-16 mini bear right in here that comes exactly on that low. And I want you to note the minor patterns also as they rally and sell off like this and right down into this time frame, which gave you this low. So where are we now? Well, we actually had this corrective period on the minor pattern. That's only that little downside bar that we came back. Right now we are early in this rising pattern right over here, and that's why I thought we would get a summer rally that you can see really is started in here. But what are the targets now that we think that this can go up to for the stock market during this rally phase? This right over here, that fib extension as we call it, is at around 3060 on the S&P 500, more than 100 points above where it is right now. And this major fib target zone, the bottom of it, we'll call it around 3250, 3260 in the S&P 500. Yes, these are very significant gains with a potential of more than a 10% further gain on the upside here in the S&P 500. My gut tells me, based on the environment that we're in and based on the fact that the political background is going to be so ugly, it's ugly and it's going to be a lot worse, that this rally we're looking for is going to abort early, sometime in the fall, late in the year, and then turn down, and then a longer bear market right over here. This period right over here calls for mid-year 2020 as the bottom of the next bear market. So when this peak comes right in here, we get, I think, into a long-term bear market. I think it's going to look worse or as long as you can see here on this 2020 peak right there, the 2007 peak right there. You can see how long those bear markets were. Bear markets traditionally average declines of some 18 months or longer. So that's a picture of what the reality of bear markets look like. So many of you have not traded the bear markets during your lifetime as a trader, and this is really what normal would look like right in here. So we think an early peak this year, but still there could be 10% upside gains into this year, into the summer. So my gut tells me, and I listen to my gut, that this does not have a lot more time to go. Some months, maybe it's 3 to 5 months on the upside, but then I think it's going to be over with and a real bear market hits. In the meantime, this is that positive period, and you can see we're moving up and sharply. Stocks for the week, they gained between 2 and 3% on the week. The NASDAQ was the best. Bond market was really strong and then gave a lot back here late Thursday and Friday. 30 years only up about 1/8 of a point. 10-year yields about 2.05%. They fell to 1.975% in a moment of panic in there. The 3-month to 10-year yield curve is still inverted by about 13 basis points, but the 6-month to 10-year is flattening now a little bit, and that's only about 3 basis points inverted. So we have a slight the inversion is slightly less than it was as the short end of the market is starting to price in a rate cut that's expected to happen in July. So the yields really plunging in here, and that has investors happy. And that has the gold market really happy, as every single country is debasing their currencies. In other words, the lower the value of the fiat money out there, the higher the value of gold, and that's what we're seeing as gold really starts to pick up. I've been saying if Bitcoin could be $9,000, then who knows what gold value should be, because Bitcoin is absurd. So we get this $55 gain in the gold market, and it was a lot more. The silver market also rallies about 44 cents. And that was a big gain also. However, the gold-silver ratio is near historic levels at 92. That's reflective of the fact that gold is seen differently than silver. Silver more of a industrial metal, and we've gotten a total annihilation that went on in the industrial metals. Copper, a big hit. Now, if you're a trader, take a look at copper. I think it's about to get a rebound also, as we have both a cyclical and technical buy signal in there in the copper market. So take a look at there. Dollar down greater than 1% on the week, and it failed big. And I'm going to show you that in a short-term view that there's still risk. And that, of course, is positive for the gold market. Oil, explosive, up $4.75 here at midday on both news of the Iran tensions and the inventories, which finally got a downtick in there. 9% gain on the week. Just absolutely huge strength that we see there. And that is a market that is likely to start getting a little more choppy. I'll show you more about that also later on in the show. Follow me on Twitter at askSlim. Become a YouTube subscriber, and make sure you give me a thumbs up if you like what's on this video. And of course you do. Some of you people are going to give me thumbs down. Put a note in there and let me know what you don't like about this video. That's it for the opening, and I'm going to show you the best and worst stocks for the week, and some of the best opportunities too. All right, we're going to get into the best and worst stocks for the week. What I'm going to show you are stocks that have had big gains and big losses, and some of them that, well, maybe not so much, but what they do have is big opportunity. So what I'm trying to do is give you both stocks that had good moves and the stocks that are giving you some good opportunities on patterns. I want to bring things that tend to be actionable. Remember that we do use cycle analysis in here, and if you like these charts, well, there's going to be a couple of ways that you can get these charts. First of all, if you become a level 4 member, you'll have these live on your Thinkorswim platform. TDA, our preferred broker, and you can we do 84 of the best traded symbols that you'll get all our analysis on, and you can request other ones also for level 4 members. Level 3 members, I'm going to tell you a little bit more about later in the show, but these are going to be available in static charts that you'll be able to have and review once a week for a level 3 membership. If you want to get either of those to try, and you've never been in here before, level 3 or level 4, write to me at slim@askSlim.com, and I will send you a link. So either request level 3 or level 4 trial, and I'll send you a half-price link for 1 month, and you will be able to see just this very unique analysis, whether it be in live charts or static charts, depending on which one you would like to have. So the static charts will be available coming in the next several weeks, and of course the live charts are available right now. All right, that is the little blip in there I'm going to give you, and now let's take a look as we switch over to the best stocks for the week. First one we're going to look at is SPWR, SunPower. This stock has had an enormous launch in here. We were very positive on it, and it just gets this big gain. Of course, solar we have felt was going to in the industry, it was going to have its time in here. And look at this huge upside move. Again, we're looking at cycle rhythms. That's what we always do. And you can see the rhythm in here. Remember, each of these cycle bracket, the cycle bracket on the bottom, this aligns with significant lows. And it tells us about the rhythms in the market that you can see right in here. And when it made this low period right here, it translated very bullishly. It got into this upper buy zone, and once it broke out above this level, it was explosive. You got this giant move past our fib target zone, past major cycle resistances, and now projecting up to this 161.8 number, about 1260 on the upside. This is a super good pattern. Yeah, it's late now, and it's had a giant move already. Goldman Sachs upgrades the stock. Now, if you don't want to chase something like this, and I don't blame you, First Solar, FSLRs, has a great pattern, and it's lagging in resistance. I think that one could get to be explosive on the upside also. I'm not going to show you the pattern. I'm only showing you 5 in here, but I want to mention First Solar. It is a good-looking stock to me. Let's take a look at 3 oil stocks, oil drillers, and a gas and oil energy stock. First one we'll look at is Diamond Offshore. Now, this has been a horrible stock, and you can see our colored phasing in there. The greens are where it's in a rising phase, and the yellows are corrective. When you get into these corrective phases right over here that you can see, it declines when it fails below the previous high and then breaks the key low. Right there, it could plunge. That's what it did. Here you could see it's moved down again, but we're in week 1 on the upside right over here. We have the drillers bottoming. Now this dashed line is the OIH pattern that also is bottoming in here. That tells you the group is bottoming. I don't see a lot of upside in here, but I think if you got a little bit of pullback in oil and these pulled back, you could get in maybe at 825, 810 in here, and then you could probably get a move up in here to about 9.25 to 985. That's really where it projects up to in Diamond, and I think that that's not a bad trade. A little trade, cheap stock, 15% up on the week, and I think it's bottomed. So crummy patterns, crummy stocks, but speculative for a bounce. And oil's probably going to be firm for a while in here. So here you can see the same thing as we look at RIG, which is Transocean, as it is bottoming also. Again, you can see the OIH pattern right here, the dash line. It's bottoming a little late. It's typical of capitulations when it does that. Here's your sell zone. In other words, we think it's going to get up into the 7 to 7.5 area in this stock. You can see this engulfing right in here. I think that's a sign the bottom's in place. And again, you might want to wait for a little bit of a pullback before you enter into this, but not bad. With oil moving up, and I think oil going to continue to be firm for a little while in here, well, these stocks are going to look like bargains, and they're going to get chased. One of the other energy stocks I'm going to look at, I love this pattern, and here's what I like about it. The stock was really bullish. Now, where it rallied, and it rallied into the sell zone. You can see that right here. The sell zone comes off of our swing high, swing low analysis. You can watch our video on that. In fact, we have more than one of those in our library of 400 videos. So this is the sell signal that came right there, and it came down into the buy zone. You can see that right here, and then started to turn up, and you can see this big week. Now, because of this positive looking configuration, in other words, this low is way above this low. You see what happened here where this low was way above this low, and then you moved up to a new high? That's very typical. Now, this one is not typical, where it failed, where you only had a couple of weeks up. A Of course, that's what the risk is, that would fail fast. But you would know that because it would get underneath this low right over here at 2470. As long as it's above 2470, the probabilities are that it's going to move up sharply. We could see it challenging this level about $35. So this is only 2 weeks into the advance. Most of these advances last for months, and this one lasted for only 6 weeks, but it was a good advance. So we would look for a month or more on the upside right now. In Devon, the stock moving up in a very positive pattern, 10% gain on the week. Now we have to talk about gold stocks, which have soared on the upside here. The gold market, of course, up big, as we talked about. Look at this stock, Barrick Gold. Now, you see the massive inverted head and shoulders in there. You see the buy zone. We were looking right in here as the key levels to be accumulating and buying this stock. The lows that came right in here and then explosive to the upside. You see the inverted head and shoulders right there. Cycle patterns make inverted head and shoulders or head and shoulders. That's how they're formed. And that's what's so important, is you're understanding the energies behind these moves. This now projects up to this area about $19 up here. This is excessive, and we expect gold is going to have a little bit of a correction. We would be a buyer. Maybe it comes back down to that neckline area, somewhere around 1460. That's a possibility. It would be just a screaming buy if that happened. Note the minor cycle rhythms right in here and how this first cycle brought you a dip. Well, maybe you're going to get that in here, where you get some kind of a dip out over here in these next several weeks, and then move up sharply again. So we're a buyer in here. I want to buy it when it's a little bit lower. Great moves for the oil stocks this week. Let's get that dip and buy it. In Anglo AU, up 8% in the week. In the silver category, these guys really leverage plays, as you had AG up 12%, PAS up 9%. I think they're all positive, and you buy a dip on all of them. This is a beautiful looking pattern. You can see how our analysis is. You want to get these charts. We give you these cycles, and we give you all of our annotations and support and resistance areas. And I think it's just spectacular stuff to look at. So this is a great looking pattern in there in gold, and maybe a little bit excessive on the upside, as these things on a very short-term basis are getting a bit overbought, and we would expect some pullbacks in there, but we think they are buying opportunities. That's the best of the week. Coming up now is the stinkers. All right, for the worst of the week, there wasn't a lot in here to give you. There were not a lot of big moves. I'm going to show you one. The last one here I'm going to show you that barely ticked down, but I think it's a sell. So that would be one of the actionable ones that we're going to look at in here. Let's start out by looking at the worst stock for the week, which was Carnival Cruise Line. They shared their earnings. The earnings were okay, but their guidance was bad, and analysts are all over this, downgrading this stock. Take a look here at what was a very bad pattern. And again, you're going to learn a lot here, because what we look at for these longer term patterns are these configurations. You can see the cycle going lower and bottoming. Going lower and bottoming. You'll notice this failed well below this area. That's what typically is happening. And each of these, when they break that key low, gives you a signal that it can go a lot lower. Now, this one, note, it's getting down to this low area, and it's late. Now, that's typical of capitulation, and breaking this does not make that big of a difference right now. We're just expecting a bottom in here any minute in here, and then getting a rebound. But again, the rebound is expected not to get very far. Still, you could get up from 46 to maybe about 50 or 51 in there. It's a bad-looking stock, and this one, I would say, it's, again, if you want to buy it and buy the dip, it's speculative, but it's the timing is right for the stock to get a rebound. RCL is the next one I'm going to show you, which moved with it, Royal Caribbean, on the downside. And this one has another couple of weeks in there. You can see the beautiful rhythms on the minor pattern and also the dominant one where they nest right over here in the next couple of weeks. This is your support zone, so we would expect it to make a low at the same time that Carnival is, and then get a rebound again. I'm suspicious about this group in that overall there may be a real weakening going on. And I talk about the consumer who is massively indebted, and the Fed is, and other central banks around the world are encouraging even more debt. So they just may not be spending the big bucks on cruises as much, and with the guidance really being bad in Carnival and this one moving down with it, I'm suspicious that this rebound in here won't be that strong. Still, you could probably see it moving under 115 and then getting back over 120. I wouldn't buy it for that. I don't think it's very good. Earnings which came out on 4/29 for Royal Caribbean were good. I don't think maybe that'll be the case on July 1st when their earnings come out before the opening. So you might watch for that period of time. Down 6% on the week for Royal Caribbean. Bed Bath & Beyond, really no news in there at all. The stock has been terrible. And this is another one. I want you to note that we have a note for our subscribers in here, 2 out of phase cycles, where we have a cycle in here that bottomed and didn't give you a bottom, and then a bigger cycle that's due to bottom in here. So the stock has been annihilated, moving down from 20 to about $11. Now we expect a rebound to come. Again, this is highly speculative. You can potentially get a bounce in here and maybe even get it up to $14. It's the time for it to move up. But again, it's not a play that I make. You can see the downward motion in here and how clear those cycles were telling you about the problems. And the bigger cycle, which bottomed here and then bottomed here, and now looks like it's going to bottom right over here. So we're going to look for a little bit of upside here in Bed Bath & Beyond. Not a great stock. The home builders were very interesting. Take a look at KB Home. Now, KB Home, you can see based on these patterns, looks like it's about to bottom and move up. Analysts have downgraded the group this week, and I think they're actually wrong. Generally, you can see this was a positive pattern as it moved up for all of these months, and now is having this modest correction down into this corrective period. Now you see what happened when the low came here. You only got a modest uptick in here, and then it got bearish again. So maybe you get up and challenge this area at 27 over this next month or so, but I'm not sure. Again, it's a consumer issue, and even with interest rates this low, mortgage rates under 4%, maybe 3.90 right now, it's not going to be that great for the home builders, according to these analysts. I think you're going to get bounces in here and another rally. Lennar and Toll down about 3% on the week. This down 6% on the week, and I think you can look for a little upside in here over the next month or two, but I'm not looking for anything giant in this group. I think they're about to bottom. And here is one I think that it may be the most actionable in here, and that is Domino's. Domino's Pizza has been, over the years a monster and has done really well. Now, this is on my list of the riskiest stocks for this year, and it's been chopping all over the place. Now, what I want you to note is that it's down about 0.5% on the week, 0.4% right now, and this motion in here is occurring while the stock market is surging to the upside. So this is losing relative strength. In addition to that, what I want you to see is that if you look at these last 2 cycles, right over here it made its peak, what we call this a left-hand translation, on the left side of the ideal peak right in here, and then collapsed. Here you could see it did the same right about in the middle of the ideal peak and then collapsed. You can see here on the left side of the ideal peak, you had this big shooting star on earnings, and it's been creeping up for 2 months, but the relative strength declining. And look where you're entering into right now. So these declining periods right in here, all of them, this one brought you a decline from about 293 down to about 254, so there's about a 40-point decline. This one from 305 all the way down to 230, a 65-point decline. This one right over here, a 296 down to about 238, so that was a 58-point decline. And here you could see, well, you had this big hammer right there. So it's reasonable to expect it to get down about 50 or 60 or 70 points in here, which would take it down under the 250 level that we have projected. So this to me looks like a screaming sell right now. Of course, I don't make buy or sell recommendations. I just bring you the analysis. And in this case, the analysis says it can't go up when the market goes up. And we have this turning over of momentum right in here that you can see on that Hull moving average. Look what happened when it turned over here. Whack. Look what happened when it turned over here. Whack. And it's turning over right now. And I'm going to say this is a whack coming. And Domino's Pizza is about to give a lot of ground on the downside. This one, I would say, may be my most actionable stock of anything I've shown you right here. Earnings come out on July 16th before the opening, and maybe we'll get a little warning before that will move the stock down. That is the worst for the week, and I'm going to be back in just a moment and bring you my short-term view for the coming week. All right, before I get into this short-term view where I'm going to bring you our projections on the 5 markets that we look at, the askSlim team is really taking a lot of pride in what we bring to you as we continuously work hard to support our whole community of traders and investors. Last week, I did mention to you that we were really excited. We're bringing on some new products and enhancements to present products, quite a number of them that are going to be coming on in this next several weeks and beyond. You're going to be unbelievably surprised and amazed by some of the quality of these products that we're bringing that is going to support your trading and your development of the strategies that you look at. It's about you being able to be better at making your directional decisions. A lot of these are going to be for shorter term traders and then for swing traders and option traders too, all fitting into that sweet spot of a month or two and even one for longer term investors that's coming a little bit later on. All of our members are going to be included in beta testing. It's going to be free, and that's going to be happening very soon, and part of that'll become in advance of them moving into our premium services. So everybody's going to be able to get a look at some of these amazing things. Next week, we're going to begin the beta testing on what we're calling, we already have a stock index report, which gives you a weekly look at the indexes. We're bringing you the stock index report daily snapshot. This is phenomenal. It's going to give you just a ton of information for short-term traders, and even swing and option traders will be able to use that information. And then coming up for our level 3 and level 4 members is a huge enhancement to what was our rankings grid. That's going to be changed, and there is going to be just a beautiful look at great graphics, and we we have created what we call the sum of the evidence, where all of these rankings that we put in there about momentum and cycle analysis are the algorithms are simply going to throw out some information that tells you the real condition and direction in that window of time that we're looking at. So you'll be able to use those as our multiple studies are then going to be deciphered within this program that we've built, and it's going to give you a great ability to bias your direction in your positions based on what this throws out is the highest probability of directional movement. Just phenomenal. Wait till you get to see this. It's going to be great. Now, coming soon, our members are going to be getting details on this. They're going to be participants in this. So make sure that you take advantage of our trials that are in and coming up. And if you want to get a trial, make sure you write to me, slim@askSlim.com or support@askSlim.com, and we'll be sending these out to you. And watch for the details coming soon. If you're brand new and you want to take a peek at what we have in our site, you can even become a free member in there, and that'll be the beginning of your movement up of the ladder of askSlim services. And as you learn from my 45 years as a trader and an analyst and a coach. So unbelievably great stuff coming up right now, and I think that you're going to be really impressed. I can't wait to hear your comments on it. It's gorgeous stuff. All right, so now let's get into our short-term view for the coming week. Coming up also, I'm going to show you a little different chart that our members get for the S&P 500. We look at daily charts when we do this, and those charts have also our cycle analysis on there. And we always are accountable to what we said in the last week. We were about 60% plus in the last week in our analysis, which is where we would like to be all of the time. Excuse me. And I lost my cursor here. So where is that? Okay, there it is. And I'm looking at all these screens over here, and sometimes I don't even know where my cursor went. So we're going to start out by looking at light crude, and I'll give you a little sense for what we thought was going to happen, and now what we think is going to happen in the market. So here is the light crude chart, and again, daily chart that we're looking at in there. And this is the cycle analysis. We thought last week that the oil market would go up. We really were concerned that it needed to avoid breaking this level right over here, and it easily did that. And it got help from the geopolitical issues and by a better inventory number, a more positive inventory number. And it moves up beyond actually the levels that we thought it would. It was even stronger. And momentum now is neutralized. You can see that right there. So that's an improvement in momentum. We're going to look for the market to have a small down week. Now, you can see in here this minor cycle coming right in here. This area up here, the top of the resistance right over there, it should really be able to stop it. That's at around 58.80. I doubt it's going to get up there, but it's possible, and if it does, it'll probably reverse from there. We're going to look for just a small down week. It's going to take a lot for this momentum to get positive in here, and then a dip, and we're going to look for a dip, and a lot can change in here. If the U.S. starts shooting at Iran, this is going to spike beyond that level. If it's apparent that there's going to be great diplomacy, which is doubtful, then it would move down a lot sharper. We're going to look for neither of those to happen and just more saber rattling, and we're likely to see it get down over here to about the $55 area, maybe a little bit above that, and then begin to move up again. So we're going to look for just this pattern of down, and then the following week moving up as the oil market has improved. But it's really in the intermediate patterns, just in my opinion, a bounce. So we're not looking for anything giant on the upside outside of something happening that, we don't want to happen, and that is shooting going on. So let's take a look now at the gold market /GC. And gold exploding to the upside up to 14.15 and then giving ground. Last week we thought it would be that momentum, since momentum had turned up, and again we're looking at momentum as a key, the slim ribbon in here, and I'll show you more about that in a moment when we look at the S&P 500. This pattern is positive and momentum positive, and that's what gives you the shows you the energy for big upside or big downside moves. Here, where it was negative, it was moving to the downside. Here you could see it got choppy. Here it turned positive and exploded to the upside. Slim ribbon, one of the best momentum indicators you will ever see. Now it got up here to 14.15, and we kind of think it's not going to be able to surpass that right now. Maybe the dollar gets a little bit of a bounce, but overall we think it's going to get choppy in here and give you a modest correction. These cycles coming down right over here. Here's a silver cycle coming down right here, and that says to us we'll chop around a little bit and then come down. And this level right over here, the 23%, is 1380. This right over here is 1360. This is our upper buy zone. We want to buy it here because we think it's going to explode again after that. So this is what we're looking for, kind of a choppy week, maybe small down, maybe get back down into the slim ribbon area right in there, and as this moves up, and then get ready to move up again. A small down is what we'll call it, and we want to buy it when that happens. Next thing we'll look at is the dollar. Now the dollar sign DXY, has a bad pattern in here. Now this extends out our intermediate pattern that we're looking at, that it projects out to a low here right just before the 4th of July, actually. So we're likely to get a mid-cycle rebound. Now remember, I just said gold down, they move opposite each other. Look at here at mid-cycle point. Look at how it had an uptick that failed. Look at here at mid-cycle point. See the uptick that failed. And that's where we are right now. So we're expecting to get a couple of days on the up and then move down sharply again. You probably see gold move opposite of that. Right over here is where an intermediate low is suggestive, and to get that, sometimes you get a capitulation, so the dollar could fall kind of hard. We're looking for a little attempted rally and then down. That will probably give you a small down on the week and then further down in the next week. The downside risk is far greater at the moment than the upside potential. Now, note the momentum in here, which just was choppy and gave you a moment of being neutral, has resumed as negative, and we think that it's going to remain negative now for this next maybe 6 to 9 trading sessions is what we're looking at in here. So a lot of risk in here. Attempted rallies likely to fail. We would sell any uptick in here because it's just very likely that it's going to be moving down again. Just like we want to buy the gold market, we want to sell the dollar market here. Remember, we're talking about short-term traders, and I'm not giving you buy-sell recommendations. Make this stuff fit into your style. That's what I want you to do. The bond market /ZB, we thought it would be a down week, and we were basically wrong. I mean, here's where it closed last week, and it's up about 1/8 of a point. So it had a much bigger move, and the patterns in here are suggestive that it probably is not going to go down much right now. We're going to likely be in a choppy period in here. There's minor corrective risk into the we'll call it next 2 weeks, as it's likely to be range bound. We're going to look for this high right over here, about 56 or a little higher, 156, to be the top of the range, and the support area right over here to be the bottom of the range, about 153.15. So you can see we're looking for a little down early and then another rally. That's probably going to give you a small up week in here, but this is really what we consider to be a choppy zone. We're going to look look for this area right over here to be the top of the range, right? Just a 156 or a little higher. We're going to look for this area right over here to be the bottom of the range right there, around 153.5, and that's kind of what we're looking for right now for this period in here. I want to sell bonds every time they tick up in here because I think it's the right thing to do because of the bigger pattern that we're looking at in here. See this dotted line? That's a shifted minor cycle. For those of you that are following cycle analysis, that says that it's likely to correct here into towards the end of July. So that would mean that this rally in here probably fails, and then you get some more decline out there. Maybe you get some good economic numbers that changes this whole thing about the Fed cutting. I think the Fed's going to do nothing this year, honestly. No cuts, no increases. And that's would make this rally in the bond market wrong, actually. So I think we've seen the best of it for bonds. I don't think we're going to get much under the 2% yield in 10-year. So I think that we're into this choppy area right in here, and I want to sell upticks is the way I want to trade it right now. So that is a look at the bond market. So now let's switch over and take a look at the stock market. The S&P 500, of course, is our focus. We thought that it would have a minor dip and then move up. We thought that the momentum had improved to the upside and that it was likely to have a little dip. We were looking for 2860 in the S&P 500 and then moved to the upside. Well, the dip never came. It just simply went up. So I want to get partial credit for that, even though we were overall positive and expecting that the upside risk was much greater than the downside potential. So let's take a look here, and I'm going to show you a little different pattern also that I want you to see, that our members get to see, and I think is very helpful if you want to adopt it, or of course get our charts. So let's first look at this daily look at the S&P 500. Now you'll see on the bottom there are cycles, and we call these overlapping cycles. The reason is because there's a minor cycle right in here. Now note right over here where this bottom came. Note right over here where the bottom came. That's the minor cycle bottoming right there. And they were aligned with this big blue cycle right in here until this shifted, and now they're aligned on the shifted cycle right here. So you've got this period right in here as a minor corrective period right there. When you get into this massive upside momentum that we have right here, it's hard to get these declines. So many times we're looking for declines that just get you to the 23% when we're in this really bullish phase, and they really were not coming down and hitting the supports at all. This one over here gave you nothing, as you can see. So it may be pessimistic to be looking for 29.10 in the next, well, we'll call it week or two. We think somewhere into the 4th of July week, just before it, that we will have this correction. We're thinking that it's tired now. It's had kind of a big move, kind of just 240 something points to the upside in here, and 230 something, yeah, 40. And you get this doji right over here. It's telling you it's kind of tired. So we're going to look for choppy action in here and a small week overall, and then maybe even coming to the downside sometime late in the week and into the beginning of next week. Our target is around 29.10. This is the upper buy zone. We should be so lucky, if we're bulls, to be able to buy it down over here, because I think that would be a super time period, because I think after the 4th of July it explodes again. I showed you earlier in the show why I think it's going to 30.60 or potentially 32.60 on the upside, and in this case this would just be a modest correction and then up again. Again, we'll look for, between now and July 4th, a dip to around 29.10. We may not get it. It might not be able to come down that far. Maybe if some shooting goes on, it will encourage the market to move down, shoot down drones. You don't really get a downside move in the market. Now I want to show you a little different chart that I use pretty extensively and a lot of our members just absolutely love. And it's a 2-hour chart. Now, not many people look at a 2-hour chart, but I love it. And using it along with what we call the projection oscillator. So for our futures analysis on the indexes that we do in the 6 segments of futures, we include this in our charts for our members because it's great for futures trading. So in this case, index trading, and I want to show you what we have here. So like I said, the momentum turned positive in the on the daily chart, and that brought an explosive move in the market. This 2-hour chart gives you a sense for trading bias. Now, it's also for entry and add-on signals. That's the key. Here, where the slim ribbon was negative, and you could see it moving down, each time the projection oscillator got overbought, it was a sell or add to short signal. You could see it stays below the slim ribbon in here. It remains negative, and that tells you that it internally corrected and then move down again sharply. The same thing right over here. You get the sell signal move sharply. Now it changed. The slim ribbon on the 2-hour chart becomes positive right there. When it does that and moves through the previous day high, these are the previous day's highs and lows, it gives you a signal that a positive or negative bias has occurred. In this case, the positive bias occurred right over here. This was a week ago this was 2 weeks ago. And then the slim ribbon turns positive, and each time the projection oscillator gets oversold, it tells you it's a buy or add to longs. And you can see in here how great that worked. Buy here, and it moves sharply up. 2-hour chart. This arrow shows you that all of these were long bias. If you're looking at short-term trader and you don't look at something like this, you're going to be tempted to short in the face of a market that's got massive upside momentum. Short-term positive trading bias, fantastic during this period. 2-hour chart, we're using the slim ribbon and the projection oscillator. I have videos recorded in there. Of course, if you're a level 2, 3, or 4 member, you can watch the videos, and I call this my favorite analytical pair. And using it on this 2-hour chart is just phenomenal. So I want you to consider looking at this, and of course, I want you to consider becoming a level 4 member. This will not be included in our new level 3, which will have static charts in there. So you have to be a level 4 member to get this. And have it live on your platform in Thinkorswim. That's it. Looking for the stock market to just give you a little bit of a pullback. Remember, this positive upside that we're looking at in here in the 2-hour chart is going to prevent very much of a downside, and if you get it, it probably won't last for long. So really good looking, powerful patterns that we're seeing in here, and that's what's brought these big upside gains. Yeah, I do get positive, and the charts just tell me, and you can see how well this worked. I hope that was valuable to you, and I'm glad to share that with you. And please do become an askSlim member, free member, or level 1, which brings you the stock index report and our ETF report. Those are weekly reports. Level 2 is going to bring you our new index daily snapshot with support and resistance and all of those things coming up, beta testing, plus everything in level 1, plus 400 videos in our library. Level 3, our new product, I'm not telling you the name, you'll love the name when you get to hear it, where you're going to get all of our algorithms in there telling you the most favorable directional bias in these 84 great traded symbols, and of course level 4, which gives you our charts and everything else in there. So become an askSlim member. You want trials, write to slim@askSlim.com or write to support@askSlim.com, and do sign up because you want to get in on this beta testing and see this great product. So that's it for this week. I want you to be so careful. It is so crazy out there. I'm always wishing you great trading.
Well, I'm going to